no trip to London, whether during LME week or any other time that I get to visit this wonderful city, it's never complete without a sit down when we bring the Gurney game plan to the airwaves for the masses here on Mining Stock Daily with the one and only Paul Gurney from Beacon Securities. Paul.
Hello.
How are you, man?
We're usually in a train station.
I know, it's a little bit quieter. It's a little bit quieter. We'll call it an undisclosed location.
Undisclosed, yeah, but what a time to be alive.
That's right. I think that might be a little understatement. Like, when's the rug pull, Paul? When's that happening?
I think we've all been waiting for it for weeks and weeks. Yeah, but gold keeps going up. Silver goes up.
Rare earths of something. I don't even know what spot prices of rare earths are, but obviously they're going up.
Dysprosium or, terbium or whatever these things are called.
You got your pockets lined with neodymium and yttrium?
100%. Yeah. So, fascinating. It's cool.
Yeah. We've seen cycles, like boom cycles like this. They've always been quick, fast, and if you're not paying attention, you can get stuck holding it back. I said this to a couple of people in the last couple of weeks, but this is the type of environment and resources, specifically the metals, where you could go into this thing having a really well concentrated top, incredibly managed portfolio of maybe 12, 15 companies.
Mm-hmm.
And because the momentum and the sentiment is so high, that could easily turn into 40.
100%.
And you lose control of it.
Yep.
How do you keep your cool in this type of environment?
Take profits.
Yeah.
And that's the thing is like every financing seems to be going up, but there's some exceptions to that. But the thing is with any sort of momentum in the market, when you've got something on an RSI of like 85 or 88, the corrections are usually pretty painful and quick.
Mm-hmm.
Last Friday it looked like a correction, but
the 4-hour bear market.
Yeah, but people are conditioned to buy the dip now. So
is that mentality that by the dip, are we seeing generalists come in and just start trading this stuff?
Yeah. I mean, just you look at like a strategy that's worked for like 15 years. Like it's like playing roulette and the color's always black. Just keep betting black.
Yeah.
So it's interesting because the people who have been in the sector and survived the 13, 14-year bear market we've had, we all look at each other and we're like, is this real? Is this for real, or is this just Trump, or is this just very specific to what's going on?
Is this a 3-year market?
Is this a presidential? I mean, a 3-year market would be amazing, right? We're 3-4 months into it. So I think it's fascinating. I think with any trade, with any contrarian trade, what happens is you have people who have this whole theory. Let's just talk about gold. I have a whole theory about gold and currency debasement in the West and too much debt. And they sit there for years and years at every conference and you hear them talk. And you're like, yeah. And now, people are like, in the UK here, we've just had 2 months of government talking about how poor we are and how we're going to tax everybody. US has got deficits, Canada's got deficits. And so clearly somebody is buying physical gold, right? It's not just central banks. It's people who are worried about currency debasement, inflation, all that. So this thesis from the people who are contrarians is becoming in mainstream, right? So it's like gold is ridiculous every day. I read a new broker's put out a new target price, 5,000 an ounce.
They have to keep adding on to their last.
Yeah, just be one of the tinfoil hat guys that says 10,000.
Yeah.
Right? Just say 10,000 now. It doesn't matter. Like predicting the gold price, I think, is one of the silliest things you can do. All that's really happened and the people who even support gold, they're worried about how fast it's moving because it's an indication. And Citadel, Ken Griffin came on and said this, and Jamie Dimon kind of said it, is that it's worrisome when gold is becoming the asset of last resort. Right?
Mm-hmm.
So people are buying it because they're worried the whole world's about to implode, or at least the West. So it's not a good setup, really. But right now the market's going up and gold's going up. So
the West isn't buying gold. I would say the West is trading gold. Or do you have any other data that shows us that maybe the West is actually accumulating?
I don't have on the physical side.
Yeah.
But I just know from the crypto side, Tether, well publicized, like they're physically buying gold.
Yeah.
to back, stable coin and all that. So it's an interesting setup. I think the fascinating thing on the producer side is we had a gold price that, and I'll talk in US dollars throughout all this, is that you had a gold price that hung around 3,300. It moved there at the start of the year. And for about 4 or 5 months, nothing happened. But the sector re-rated because in Q2, the producers all came out and everyone saw, look at all the money.
The miners started outperforming the
right.
metal.
And so you've got a Q3, the price didn't really start moving till mid-August, end of August. So you're going to have a quarter where, it's average price. I don't know what it was for Q3, but it's not 4,000. But you're going to have that situation where gold's going to level off at some point, and then the producers and other valuations need to catch up to that. So we haven't seen that yet, but the producers keep going up, but they're not going up as fast as they were.
Well, we're starting to see production numbers come in from the producers. The financials start trickling in here in a couple weeks. What's the street expectations for the financials here? Or is the street even prepared?
I think we're behind. The analyst long-term forecasts are 2,500 an ounce. I think that's our firm is 2,500 ounce long-term. And that's most of the street, 25 to 28. And I don't think they will have imputed a spot price for the quarter, or an average price, because you don't know you actually don't know the timing of when people sell gold. So it's actually, I've covered these names before, so it's tough. You can't just throw the average price. So it's always a bit off, but the results are going to be phenomenal. There's going to be a ton of cash to go around, and right now, biggest question is, what are the companies going to do with the money?
Yeah, what are they going to do with it?
Right?
Yeah.
And so far, they're sticking to the script of, we'll do buybacks, we're going to do dividends, potentially. Investors seem to prefer buybacks as more tax efficient. And then the bigger question is, when does M&A show up in the sector? Which you haven't really seen on a large scale. It's been predicted for, a year or two. Company X is going to buy Company Y and all that. None of it's happened, but the reality is that gold prices move so rapidly that it's impossible for you and I, you're senior A and I'm mid cap B. Mm-hmm. How do we transact? Because if you're trying to buy me, my price is 41.97, whatever the gold price is now. Yours is 2,500. Like, there's no way we're ever going to get there on value.
Yeah.
So unless your paper is so well rated that you can just do a paper transaction, then maybe it works. But like I this whole like mentality of like, oh, there's going to be this huge breakout in M&A, like I just don't see it. Because why would they do that? They don't have to do it right now. They've taken the pain on the senior side of their production profiles being right-sized. Like it used to be, let's produce 5 million, 6 million, 7 million ounces, and all of them have realized you can't maintain that as a senior.
Yeah.
So, Kinross has 2 million ounces a year. I think what's Newmont 4 or 5, right? So,
but that kind of questionable M&A, just to do M&A because things were good. I mean, those are mistakes made 2011, the last cycle, which turned a lot of people away because in hindsight, it was a terrible thing to do. Have these companies learned from that lesson?
They've learned because the people that are management are still the same people, right? So you don't have to relearn a lesson if you learned it the first time around. But you're seeing turnover on the senior management side, right? So Newmont and Barrick made changes on the same day. But the temptation will be there at some point. It 100% will be there because gold assets aren't, unless it's a gold copper mine, they're not long duration assets.
Right.
Right. So they're 15 year assets. So if you just sit there and you don't try to do anything, then you just have a depleting asset at some point.
Yeah. Well, there is one executive who's not here. That's Mark Bristow.
Yeah.
That was an interesting saga. Globe and Mail came out with a very kind of interesting story about that outing. Were you at all surprised with his departure?
I don't think many people were surprised by that.
And if you look at Barrick, and like all these producers had incredible runs, but yet Barrick was still kind of like stuck in the mud.
Yeah, it's tough to turn a big ship around, right? Yeah. And so everyone in London knows Mark and loves him because from the Randgold days, it was a very entrepreneurial culture. buying up mines, doing the arbitrage between Africa and North America, and it worked really well at a certain scale, like up to one and a half. I can't remember what Rheingold got up to, 1.5 million. But once you're that larger lumbering company, and you can't pivot and shift as quickly, I don't think it works for someone like him in that organization.
Mm-hmm. It's interesting. I've actually never shared this story, and has to do much about mining at all. But about a year and a half ago, I was in this hotel, and I woke up early and actually made it to the hotel gym in the morning to start my day. And I walk into this gym, and who's in there? Mark Bristow.
Wow.
Yeah. In the middle of his workout. I was shocked. I was like, that guy is a goddamn animal.
Yeah.
In the beast. And like, I mean, he's got a couple of years on me, and there's like no way I could keep up with him.
He went, and this was, that might have been 10 years ago. He rode all like from the tip of Africa all the way down to South Africa with his sons.
Yeah.
On like, just like motorcycles.
Yeah.
Like he's an adventurer. He's an adventurer. He's a phenomenal person, phenomenal executive, right?
Yeah.
So,
well, and I'm hoping that those are the type of stories, like, mining's filled with incredible stories, and I'm humbled that I get a chance to like help tell those stories. But I do hope when the dust settles that whatever happens with Mark's career going forward, I don't know. I don't have any say, obviously, but I do hope that in time we look back and like Mark Bristow, absolute legend in this sector as an executive, a business, but just as an individual, like he was a force of nature.
If you want to do like the sliding doors on Mark Bristow, okay?
Yeah.
Like what could have been? So remember when he took over, like gold, this was 2018, like gold was, I don't know, 15 or 1600, right? COVID hadn't come up yet. We were tapering, like the world was a much better place. And he said, we need to move into copper. And in 2018, if you look at it, like he was looking at Freeport, right? Yeah. Well publicized, right? That was out there. And Freeport at the time, I think it was like a $5 or $6 stock. They were going through their own issues. And he couldn't get that across the line. But what if, right? What if he had bought Freeport at $10 a share in 2018? It'd be a much different company today, right? And it would look brilliant. Right. But that's the sector, right? It's the problem after that was he did the JV with Newmont in Nevada, but he just never got that next acquisition. That's what that article basically said.
Yeah.
Is he didn't move his bid price up. And so he kept losing out on assets.
What if Barrick was the acquirer of the Dixie project instead of going in with those JVs of exploration of claims surrounding Dixie?
Yeah. Exactly.
It's all of what ifs, but that was a head scratcher because that actually caused Great Bear Resources to like start really going higher. It's like, well, if Barrick's interested in everything surrounding Dixie, then obviously there's something there. It's just, in hindsight, I don't know if this is fair or not, but it's like he probably just should have gone in.
But if your lens is the gold price is 1,500, and actually it's not going anywhere, so I can't overbid for assets because my lens is $1,000. It has to work at $1,000 an ounce.
Yeah.
And that was always, he did say that in meetings, right? $1,000 an ounce, 10-year mine life. And if you never move your input price and then the market does what it's doing, and no one expected this, like, be honest with ourselves. If the seniors expected the price to be what it is today, then they would have bought a load of stuff 5 years ago.
Yeah.
Right.
Well, you spent some time marketing Kinross here in London. What was it, last week?
It was last Thursday.
Last Thursday. Not that you can necessarily share the skinny on that, but what was the general sentiment like here in London, getting to hear from a gold producer, and what were the questions, and were there new faces at the door?
There's definitely new faces. There's generalist style investors looking at the sector, and something like Kinross, which is 29 billion market cap and trades $500 million a day. I think 500 million a day is their liquidity in the US. Like, that's something a larger fund can take a look at. But the reason I let off with M&A is that all the questions were on M&A,
Really?
right? Like, are you going to buy something? Are you looking at things, right? And it's like, it's just funny how investors think. Like, if you try to do something countercyclically, you get nailed, which is they bought Great Bear and they did it with some leverage. And that, in hindsight, that looks brilliant, right? Because it's paid off the debt and they bought at the bottom of the cycle. Whereas now it's like, well, you should buy something. Well, why should I buy something now?
It's should reap the reward.
No, it's just, it's honestly, it's how humans think. And, with platinum, shifting to platinum, like last year I was talking about platinum with investors, and a good friend of mine, Ed Sturck, he works at the World Platinum Council, and he had this whole thesis on platinum and palladium were going to break out. And I was like, this is amazing, right? Like the deficit, and you go and you pitch that to clients and you talk about it, and everyone's like, platinum is awful. EVs are taking over. It's the end of the world. And now, like, platinum's doubled, palladium's doubled, and
it still feels like it could go a long way.
Yeah, it's a tight market, right? It's a very, very tight market. Yeah. And so, and the feedback is still like, well, maybe I need some exposure to platinum
just to get in.
Yeah, just to get in, right? Because gold's done so well, and maybe there's more life to ICE vehicles, and maybe this whole China thing, because they've gone full EV, maybe the US stays ICE longer because of that,
Yeah.
So
yeah, fascinating. What about the whole silver move's been obviously incredible. We finally busted over $50 an ounce.
Mm-hmm.
A lot of people are out there saying this thing could double again and do so in quick order. I listened intently to that, and I don't see, why not?
Yeah.
But at the same time, I also kind of wondered, like, all right, is that some like tinfoil hat stuff as well?
Yeah.
I'm also hearing there's not a whole lot of physical silver, at least here in these parts.
No, in London it's a short squeeze, right? So what's going on right now is a short squeeze. Market's been in deficit for, I think it's 5th year. Mm-hmm. The thing on silver that you have to be careful of is if things get a bit too heated, it is an industrial metal. So at some point there's a price elasticity there, mm-hmm. right? And so, it's using solar panels in China and what have you. So like if the costs are going up, at some point it will hit demand, and it's not a big market. So if you're telling me, listen, I was a $50 an ounce silver guy like a year and a half ago, and here it is. So now where, right?
Right.
And you're like, well, of course it can squeeze to 100, but understand that if it does that in the next 3 to 4 months, there'll be unintended consequences, which might mean, and China's already heavily subsidizing solar anyways. They might be like, this is too expensive now. We're gonna cut production in half.
Could go back to 50 pretty quickly.
Because the wedge on silver is investment demand.
Mm-hmm.
I don't have the pie chart right in front of me. I think it might be 10 or 15% of it, but it's not unlike gold was when the gold ETF started, right? So if you have that investment demand as the wedge, and all of a sudden the real users, the industrial users, are like, this is too expensive, or I substitute it out or whatever, which is what happens in commodities, right? Like, and so that's the thing, the difference between silver and gold is it's a bit more of an industrial commodity. So I watch for that. I don't think at these levels, I don't think it's an impact, but if you're going to be like a gold, silver is going to $300 an ounce. I'm like, well, there'd be an impact there.
Yeah.
There'd be demand destruction, which no one has in their model. It's just a linear line of markets tight, right?
On the flip side of that, in the copper space, we've had a little bit of supply destruction over the last couple of years. Mines coming offline. Kind of started with Cobre Panama at first. Obviously, Grasberg as of recently.
Yeah.
Issues with Kamoa in Congo, and then what's the mine in Chile that's escaping my name?
It's Codelco. I don't know which one it is. Yeah.
So we've had, give or take 4, 6, pretty good mine supply coming offline. And I know there's a little bit of like, games that being played in the tariff war starting in April, where the number of physical shipments coming into the U.S. can get ahead of the tariffs, and then a little bit of a taco trade in there, but we're starting to slowly climb back up here because of the supply destruction. Is there, I think there still remains an opportunity there.
Yep.
With copper, but how careful do you have to be on where you place your chips?
The thing on copper is there's like anywhere between 5 to 8% supply disruption every year. So whenever I see everyone's like, oh, there's a mine coming off, it's a copper price is going to squeeze higher. I'm like, it's in everyone's model that there's disruption, whether it's strikes, mine, something happens to a mine or whatever. We've had a lot more, to your point. So the market is tight. And I think what it highlights is these long life assets are pretty old in the tooth.
Yeah.
Right. And they're big and they're hard to replace. So like a Cobre Panama, which was, I don't know, 1 or 2 or 3% of the world's supply, like that's just been sitting idle for 2 years now, but it's still there. It'll come back at some point. But these projects, which cost 12, 13 billion to put in production, they can't be replaced easily. So and copper, again, mostly an industrial metal, and there's substitutes like aluminum or whatever and all that. But for the most part, it's very good at what it does. So it can run a lot before people substitute it out. So it's very important where the copper is, and in particular in what we're seeing between the U.S. and China. Like if it's in the Americas, even better. And I mean, like, North America and Latin America, it's much better. But the kind of issue on the side of what we do is the capex for these projects is so huge. Like there's no junior that can fund a copper porphyry, copper gold porphyry, right? Like how are you going to do that?
Have a hard enough time to explore it for one.
Find it, and then you look at what happened with Teck, right? I mean, they basically poured all the coal money into developing QB2.
Still can't figure it out.
And they can't figure it out. Now they're just sold, right? And I think they spent something like 10 billion or 11 billion building a project from cash flow, right? But who has that wherewithal to do that?
I mean, what's your speculation on that move? I mean, was that the appropriate thing for Teck to do?
My understanding is that Anglo's done about 18 months of due diligence on it. I'm not close enough to Teck to know the merits of what's happened, but it's an interesting one in that Glencore was going to take the whole thing out. The Canadian government said, no, we have to keep part of it. You can't take the whole thing. And then the rest of it just goes to someone else 2 years later.
I'd be pissed.
And let me tell you the one thing, that commenting that the headquarters has to be in Vancouver. Well, great. Like when Newmont bought Goldcorp, you said the same thing about the exploration headquarters, and they just shut that down 7 years after the fact. So like, unless they're signing some sort of agreement for perpetuity, like you say whatever to the government to get stuff done, and then after a few years, you're just like, it's not working out, or the talent's not where we need it to be, and our center of excellence is in London, and so it's an interesting one.
The moves out of the U.S. with the Trump, excuse me. Well, I'll give Biden credit. I mean, he did approve Stibnite on his way out the door. And that's had some really more positive news here this fall. But the Trump administration obviously continuing to push natural resource development. Biggest news out of the copper space, obviously approving the Ambler Road up to Trilogy Metals. And that obviously has more implications other than just mining. He approved it for the second time.
Yeah.
I like to remind people. He approved it twice.
Yeah.
And but then the equity stake in Trilogy, and that has just become a trader's delight.
Fascinating.
And I keep on wondering, it's like, and I've had this conversation with a couple of people here on the podcast about exactly this, Paul. It's like, I understand, like, we have not funded resource development appropriately for decades.
No.
And if the markets aren't going to do it, maybe the government is the last person or the last entity to do it, and they must do it.
Yeah.
But is it appropriate, or do you kind of scale down that philosophical capitalism model and maybe go a little bit more Chinese in the process?
What is that? What a little more Chinese means? You set up some sort of pseudo-state-owned organization,
state-owned equity.
Yeah. Listen, I think the U.S. policy, by the way, giving credit to Biden and Trump or whatever, is a policy they have, right? And so, Trump is just implementing it, although he's going to take credit for it. I think it's one of these things, like whoever the president was, they'd be implementing something. I think he's way more of a capital markets guy. So I think that's the let's just take a stake in this company. And if you can, like Trilogy was, I don't know, was up like 100% a day, right? So
it was up like 60%.
So that investment just lowered their cost of capital massively, right? And I think if you want the private sector to come into these things, the biggest pushback, Canada and the US, and every chart you see, and how long does it take to permit a project? Like, I don't even believe the numbers. But now that I've followed a project that got discovered in Canada in 2011, it's still not a mine, even it's going through, you're like, it really is like 15 years.
Yeah.
So the government can put in policies in the US in particular to try and speed up permitting. But we know that, the deep state exists and that there's all sorts of organizations and trying to get them on side, and it's difficult. So the easier way to just demonstrate to people is to take these stakes in companies. I didn't expect them to do it. MP Materials, Trilogy, all this.
Lithium Americas was the
Lithium Americas, right?
That. It was like, why do we care about lithium?
No, and I just think it's signaling because, like, what's this? They're not big stakes for the U.S. government, really, right?
It's just not when you can create the own capital.
Exactly. You're printing the money to just buy the stake, but the reality is, if Lithium Americas doubles, and you can do an equity raise, and then was it GM they have the contract with or whatever? Mm-hmm. Like, it's just signaling to people like, we will make sure this project happens. Because the reality is, any company you talk to, it's not just social license. It's like, how quickly can you permit?
So, I get it. Like, it's definitely reinforced the industry as like a good place to invest, or hopefully it does. Obviously we've seen the charts, and it's easy to say now in this type of market.
Yeah,
I get that, but I almost wonder, it's like, would you have had the same market outcome of like those de-risking moments if the US government actually did the really hard work with permitting reform and narrowing down that timeline for permits, rather than say you wake up on a Thursday morning and all of a sudden the US taxpayer owns a lithium company?
Yeah. I think the issue of identified is a hard problem to solve.
Sure.
Canada has different nuances because you have it's First Nations and that, and impact benefit agreements and that part of it. There's just layers of it. But I think there's so many fiefdoms in the US. Like, it's the intractable problem. Yeah. Let's, even if we can speed something up by 20%, it's still an improvement.
Yeah. But it's also become a sales pitch for companies now.
Yeah.
It's like, oh, well, obviously the Trump administration is looking at copper and rare earths, and we've had this project for 30 years that we continue to scrape away, raising $500,000 every 6 months to keep the lights on. But this is our out, guys.
This is why I look at it as not Trump policy. Trump's implementing it maybe a different way that Kamala Harris would have implemented if she was president. But the thing is, it's a U.S. policy. It is like their doctrine of like, and everyone sees this now, right? Like, everyone, like China, everything was copacetic. Then they're like, actually, you don't have errors, right? And they're toying with us, right? They get what they're doing. It's like, we get what we're doing.
But it really screws us over.
It does. But again, like, what will happen is invention. What will happen is thrifting. Mm-hmm. What will happen is people will figure out a different way to do things while we ramp up our capabilities on our side.
Well, I do think there's an incredible opportunity to... Don't underestimate the ingenuity of the West to take a problem and find solutions.
Exactly.
And some of those things might fail.
Yeah.
But in the last, since April, as this continued to get moved faster and faster down the road, that there are people out there who have maybe been working on this for some time, and are now working even harder because time is of the essence. The more they can bring those innovations or that technology, specifically on the processing side, that it's probably way more happening than we probably give it credit for. So, or maybe we do give it credit, but I think it's like moving pretty damn quickly.
Yeah.
So, but the processing is the key.
The processing is the key, and that's not like something I think what the general public loses sight of when they see headlines and whatever. It's like, we're going to build copper mines in America, or we're going to do rare earths. They don't get, like, you're a decade behind. Like, so it's great to have the the idea that you want to do something, but the execution is all that matters. And so that's why I was like, well, Trump's got three more years, right? 3 and a bit more years. So it's like, it is a U.S. policy. Like, they will support this because whatever happens in the decades ahead, you can't be in this position again. So, they're going to build out rare earths. And what's going to happen, right? What's going to happen is they're going to build out rare earths, and then the world eventually will calm down, and then we're going to have too much rare earths.
Oversupply.
No, 100%. We're going to have too much rare earths, and the price is going to collapse, which is great for the consumer. Okay. But that's how commodities work.
Yeah.
Right. So, we're going to overbuild, and then everyone's going to be, and we're like, why do we ever build all this rare earths capability? And forget, because China wouldn't give us 90% of it. So,
is the eagerness at all similar in Europe and UK? Are they starting to talk about this stuff?
Not really, because how long have you been here for a day?
3 days.
3 days. Okay. My line now about the UK. Honestly, for the UK, we've got this budget coming up end of November, and since August, the government's telling us it keeps growing. There's a 30 billion sterling gap in the budget, which is 40 million US-ish.
That's it.
Exactly. No, we're the only nation, we're only Western nation trying to balance our budget. So credit to the government for trying to be responsible. And every day in the newspaper, you see it. Oh, tax the rich, the broader shoulders, and they just keep coming up with all these
easy solution.
It's almost like if your name starts with P, your tax rate's 5% harder. Like, we're almost at that point in the government. And so, like, everyone's just so depressed here because they're like, oh, it's so bad here. And I was like, well, at least we're not France.
Yeah.
So it's like, France doesn't even want to balance their budget. The government's about to give up on the country, right? Yeah. I said they're the biggest spending nation in the EU, right? And the pension age is 63 and all this. So
they tried to raise it to like 65, and people just not having it.
So the point is, like, we set up I think the EU set up a critical minerals fund of like $2 billion. What did JP Morgan just say the other day? They're going to do 1.5 trillion into critical minerals or whatever.
Well, maybe it's just a headline to like make people happy, like, oh, we are doing something.
No, I know, and it's Jamie Dimon, right? And it's just like, but whatever. It's just the impetus. Like, the U.S. industry gets behind the U.S. government, right? They're like, this is what we're doing. Whereas here, there's so many other issues going on in Europe right now that it's just not in focus, right? It's just between, what's going on the Eastern Front and debt and, all sorts of things. People are just like not focused on how do we get our rare earths.
Well, and the government has basically said there's endless amounts of money to get this thing figured out. They'll throw money at the board, and it doesn't do anything to, bring down our deficit by any means. But I think people would be rather like, okay, well, if we can resupply the U.S. and bring manufacturing back and innovation to a healthier spot and have everything provided for us, I guess we can do that in the name of higher deficits.
Yeah. I mean, you can spend deficit if there's growth, right? Like, that's a bit of a mug's game if you don't have the growth part of it.
Yeah. All right, man. You put out this daily note every day. It's obviously one of the lovely things that I read. And, there's a lot to discuss, and I feel like we've glossed over a lot of things in the last 30 minutes, but is there something that, like, really niche in there that maybe we have forgotten to ask? Or where is, like, something that maybe is above the horizon? It feels like literally the tide is raising everything here. It's all in the forefront, but there's got to be something in there that continues to be suppressed.
That's just percolating in the background.
Yeah.
So, listen, I'm always looking for the stuff that no one's looking at. And I do think that's lithium.
Okay.
I do. I think, well, this lithium America thing is like, whatever. But
no big deal.
No, I think, listen, lithium price rally to start whatever. Well, this summer basically, it's calmed down a little bit, but it's found a level, and it's like there's no new projects that have come on. There's no new mines that have come on.
People are doing really good work though,
and the demand side keeps growing.
Yeah.
And so that market will get tight. And you did an interview with somebody from Fast Markets. I can't remember who it was. And I listened to it.
Yeah.
And it kind of changed my view on things. Because it's like, everyone's like, well, in 2 years, we're going to be in deficit. And I was like, well, we could be in deficit in 6 months then. Because, the supply number is easier to forecast than the demand side. So lithium is the one I call off the radar that I could see that inflection point. A lot of the lithium names have moved, but just on the sentiment of hey, the US is going to buy 10% of us. So, you might as well get the rise. But listen, a lot of the attention is always gold, copper, silver to a lesser degree. And then lithium. And the other ones like nickel and that stuff still well off the radar.
Still a dog.
Yeah.
Zinc's kind of came up a little bit.
Zinc's moving.
What's any sort of driver behind
I think it's just this price arbitrage between China and the rest of the world.
Okay.
Right. I think that's a trader arbitrage.
Yeah. The lithium thing, I think we could look back and it may remind us of what gold did in the gold equities. Like, we were in a very 2022, 2023 was absolutely terrible for raising capital, any interest in those markets whatsoever, before gold had its move. But, on the exploration and development side, for the companies that had good access to capital, could keep their teams together, continue to do good work on the ground.
Yeah.
For 18 or 24 months or longer than that, they're obviously like reaping the reward with a better market now, right? And it almost feels like maybe in a year or two's time, we'll look back and be like, man, remember how bad the lithium market was of 2024 and 2025?
Yeah.
But some of those companies, in Quebec or wherever, somehow scrapped enough money to keep boots on the ground, do good work, expand programs, keep drilling, develop, and all of a sudden it's like they're doing exact replication of what the gold explorers and those equities did in 2024. So maybe that will be the case if we finally have a lithium market.
It could be, but the thing is, like, we had a 10-year bear market in gold, basically. Maybe not 10 years, maybe 8, 7, or 8. What were year like 4 of a lithium bear market?
Yeah.
I just look at it as like a market that could get tight. You're just like, what's off the radar? And if you look at, like, the sector hasn't raised that much money. I think when the lithium price rallied 2 months ago, there was a few Aussie guys who filled up on it.
Mm-hmm.
But that's the one I look at. I keep an eye on things and I meet companies and I'm always willing to look at them because, to your point, the better projects, they've kept the lights on. They cut back spending for 2 years. They just try to keep permitting and whatever things live.
Yeah. Yeah.
And waiting for that point where they can maybe top up with like 10 or 20 million bucks to keep moving things forward.
Yeah. Well, your institution, Beacon Securities, they've done a number of pretty big deals, financings for companies in the last, recently, I would say 6 months.
Thank you.
Congratulations on all that. What is the state of, obviously access to capital is not a problem right now, but usually when access to capital gets a little flows too easily, it's usually a sign that,
I share your view. I'm a big believer in capital cycle, which is when a lot of capital flows into a sector, creates disproportionate valuations and bubbles, for lack of a better term. But what I would tell you in commodities, it feels like the rising tide is lifting all boats. But to your point, like if I'm trying to bring a nickel company to market, is there $100 million for them? Is there 10 million? Is there 20? Like on the equity side, depends on the project, but probably not. So right, this rally is being led by gold, silver, and copper. So I wouldn't say this is a market where you could just say, I have a copper project in Colorado. Like, can I raise 50 on like a PowerPoint or something? We're nowhere near that.
Mm-hmm.
And in order for you to get to that point of the market, you do need flows to come into the sector.
We're not seeing the dogs be able to capitalize.
No, you're not. Okay. But it's like, I've never seen a happier set of people than I saw at Beaver Creek.
It was crazy.
Because every time you're there, it's usually like people look like they're slitting their wrists. And you're like, what the, they're presenting for the 50th time and no one's giving them any money. And this time around, they're like, I just got my money last week. So
I was actually like really, I was thinking like, okay, I'm going to do a lot of observing the first day and seeing, how people are acting and, obviously how much jubilation is there going to be at Beaver Creek? And I knew there was going to be some. Obviously there should be, and I think we all deserve it. But I think my biggest tell was the very first day is I went out to the back patio and it was like the cocktail hour at 5:30, and there were already dozens of people smoking cigars, like the Big
unreal.
Daddy Warbucks, you know?
Yeah.
And I was like, that usually happens like later.
Yeah.
You know, so people were like really happy. And I know that's like a silly thing to like observe, but that was like my first tell.
Even at that altitude. Come on.
But, you know, yeah, it was crazy. And the fact is, like, you know, and here we are 2 months and a half later, and it's still
going. And the thing about our sector is it's a really small sector. It's a really small part of the global benchmark and everything. And so when you're in it, like we are, we feel like it's the only thing that matters. But I'm always looking for the people outside of the sector who are bringing flows in.
Yeah.
Right. What
are you seeing there?
It's happening.
You mentioned the Tether crypto.
No,
people.
That's different outside capital.
Generalists.
Right? Yeah, but no, generalist people dabbling copper side, but mainly on the producer side, right? Because the producer side is leverage, right? But
they haven't been sold the moose pasture yet.
No, exactly. But eventually your risk curve goes up, and you're like, I want something a little, spicier than owning Anglo-American.
Yeah. So maybe like the follow-up, and maybe we can be a little bit more educational here. Take it way back to the basics in a conversation that you need to hear multiple times when you are first starting out speculating in this market. Like, if you're first starting to dabble, what's important? What should be the most important things when you're making your first allocations into a bull market like this one?
The key thing, and like as we know in the junior space, is it's basically like a VC model, right?
Yeah.
So you have to place a lot of wagers. Producers are different, but as if we on the junior companies, like exploration is a failure game. It's like opening a restaurant. Most of them fail.
But at least you have a little cash flow to restaurant.
Yeah, exactly. Well, so but it is it's a golden era for just giving like a snippet of like for brownfield exploration, for restarting mines that closed in the 80s, right? That type of thing. There's lots of appetite for, because if you had an existing mine, an existing discovery, there's more around there, and the prices 50 years ago were 3% or 5% of what they are now.
Yeah. Any stories you guys are working with you're really excited about? And I don't want to go over all of them, but things that like there's some real opportunity there, and that's why Beacon's partner.
Looking at them, well, it's everything we back. It's like picking one of our children.
Yeah. All right, pick your favorite child.
I can't do that. I like them all. I like all of them. Yeah.
Oh, you're not going to say anything?
Oh, sorry.
Okay. All right. How about specific metal exploration?
Oh, so we love gold and we love silver. So, on the silver producer side, I gold and silver.
See, I did get one. I got one.
Ah, you got one. You did. Yeah. Yeah. So they'll be through London in a month or so with us. So, yeah.
Nice. All right. My friend, thanks so much for doing this. Always good to see you.
You're welcome.
And hopefully not too long we'll do it again. Maybe in the spring. Get through the winter.
Through this cold winter.
The cold
it's not
British
this time.
Winter.
It's a hot winter.
Yeah, hopefully. I hope so. So, yeah. All right, my friend.
All right, sounds good.
Thanks so much. And if anybody has any follow-up questions, how can they reach you?
How can they reach me?
Send me an email.
Send me an email or hit me on LinkedIn as well. Sorry. Put me on the spot.